Hello traders, welcome to the TMT Daily Strategy video for Tuesday, June 5th. Okay guys, we had a beautiful follow through from Friday's non-farm payroll numbers. Now we need to see, are we going to move forward and continue this rally, or are we going to pause and get this turnaround Tuesday, which we usually get, and maybe have a little pause or a little bit of a down date on Tuesday. That's yet to be seen. We're basically flat on in the overnight session at the moment, but very early after the 4 o'clock close. So we're going to see what happens. But so far, pretty constructive. NASDAQ filled all of its gaps. So can you imagine? Pretty good analysis, guys. And this is what I say. Technical analysis is an art and not a science. And remember, it's what the trader gets out of that information and how he applies it to his trading, his or hers trading. So it's very, very important. Very serious. You have to take this very serious, a technical analysis, but it works all the time. It's been working since the since when the Chinese were trading rice with the candlesticks, and back in the 1800s, I think even less than that, earlier than that, excuse me. So it's a great tool. Master it, okay? But you're not going to master the markets. You want to be a student of the market while you're mastering technical analysis. So doing very well so far. We're doing good here. Things change rather quickly, so we don't want to just say, okay, we're getting long and we're looking at new highs. No, that's not the case. We want to be professionals and manage our book accordingly to your risk tolerance and, of course, your trading account balance. So very important. I like to emphasize this every once in a while in our research video. Because when you know what happens is when the markets get a little too easy, and I'm not saying that they are, but when the markets get a little easy to forecast, it throws a monkey wrench in your forecast. It just says, whoa, where did that come from? And we don't want that, right? We want to be happy with what we're doing. We're making money, but we also want to be diligent in our analysis work and continue to apply hard work. And that's how you're going to be successful, is really applying that, taking that time to really dissect stocks, indexes, seasonality trends, and that's what we do here at TMT. We're always researching, always, and that's how you become professional and profitable. You know, you have a lot of competition out there, not only just a professional trader and manager, but you have the algorithms, the news algorithms, the HFTs, just, you know, throwing price all over the place. But at the end of the day, price is price, and price is what pays us. So let's just keep that in mind going forward. Okay, so we jump right into the charts. We did break out of our horizontal trend line, right? Our horizontal channel. We did break out of that, so that looks pretty good. And again, you know, coming off of Thursday's low, we had Friday, and we had, so, you know, we're up about 50, 60 points off the low from Thursday, maybe even more than that. So it's okay to have a pause day for Tuesday, or even a little bit of a give back. We just don't want to see any crazy selling going on, okay? And obviously, and we want, if Donald Trump could, you know, take a step back on his tweeting and let the markets be markets here, then I think that we would have a no-brainer that the markets would challenge the highs, and then, of course, get that set up. I'm also going to give you a couple scenarios in gold, crude oil, and of course the equity markets. I've done that before. You've heard it. There's really no change, but let me say it again when we get to these charts. So VXX, we are looking for a move lower, 29.96 down to the 26 area. If we get that low, we're going to start dollar cost averaging. A long position in VXX means that you're shorting the market, okay? So nothing really, no new change here, but I just want to show you where we are. Okay, ES, nice little breakout of our horizontal channel. We broke out. Not a big follow through day, but nonetheless we did break out and we held the gap up above. Now that's a bullish sign here. We have not filled this gap yet. Okay, I just want to be clear. We have not filled this gap. And I mentioned yesterday about having it on a closing basis. I'm leaving this gap up here because this is a gap fill that needs to get filled. We talked about this on the spiders, I think, as well. Or one of the other indexes that travel. I think it was even the ES. But nonetheless, I want to see closing bases on all gaps, and that will confirm and solidify that price actually moved up there, closed above, and then reversed. So we have 3 full gaps that need to get filled. We're almost close to the first gap, not quite. 27.50 is going to be the first gap that's going to need to be filled, and then we should see 27.88. Now, I have some upside targets, and we are looking at The first area is going to be 2880. Now, where do I get 2880? These are Fibonacci extensions that I want you guys to be aware of. So what I'm going to do is we're going to do this together, and I am going to put down, let me just get to 2880 right there. That's the upper end of our algorithm where we have our resistance, and I'm going to add this as we speak. Okay, 2880. That's going to be our first upside target. Now, it does not have to get there. It does not have to get there. It's an extension. It's not a gap. So a lot of times gaps get filled. Most of the times they get filled. This particular extension, these are Fibonacci extensions, does not have to get filled. Next extension is way up there with the 2973. 2973. Let's get up there, way up there. 2973, right up in here. Okay, I'm going to bring that down just a touch. Right there. Right there. Okay, 2973. And actually, sorry, 2972. 2972. 2972. And here we go. These are extensions. They do not have to get filled. Just want to repeat myself, okay? These are extensions. These are gap fills that usually and always get filled. So these are more important than these areas up here. All right? So let's pay attention to that. Very constructive in our MACD and RSI. So things are moving along rather nicely. All right, next let's take a look at our YM. And now this is lagging now when it was leading. This is lagging. It's okay to lag. And the ES is not doing as great as the NASDAQ or the Russell 2000. But those are two leaders, and they are leading, okay? I'm not really excited about the transports. I'll get to that in a moment. But again, these are your levels of resistance in the YM. 24,934, and then of course 25,000. So there's really no change. And YM did not break out of the horizontal channel. NQ really exploded. I took this away. Gap is filled. All gaps are filled on the NQ. Next, we challenge the highs. That's going to be 72.1275. Okay, that's going to be 72 70. Well, let me get back up to here. 72.1275. Support will be the 21 EMA at the 69.44. All right, that's going to be the NQ. Now the transports really haven't done anything. Holding its own, it's fine. There's nothing really wrong with it, but I would like to see this start to get going and gather momentum along with the NASDAQ and the Russell, of course. And if that does happen, then we'll get that explosive rally back up to the 27.78, like we're looking at and anticipating. And I'm looking at a rally to that 27.78. Now, do you dollar cost average a short trade? Yes, and I'll tell you why. Because we could go all the way down, back down to 2700, 2715, and then one more rip up, or we could see the corrective phase now, and then we start, and we don't see that 2780 in anymore. So you want to either way prepare for a move lower, and then of course move your stops and trail all the way down until you get stopped out. And if that does get stopped out, your trade, and then we're looking at higher prices again, so you just short one more time, and that will be the final short, and we will call a market top. But this next leg lower, when it does happen, is what we're going to be watching rather closely. Next is going to be the Qs again. Beautiful gap fill, beautiful, beautiful rally right off the horizontal channel, and now we're challenging the highs in the Q. So very constructive, very, very bullish. I would not be shorting. We've been talking about this all the way from down here. All the way down here we've been talking about saying, hey, I like it. Yes, we went sideways for 2 weeks, and now we're starting the uptrend. Remember one thing. Markets will trend more, markets will consolidate more than they trend. Now, there are some exceptions to the rule. 2013, the market just went straight up, had a 32% gain. And 2017, when the markets basically rallied straight up. But they were consolidation areas, and they consolidate more than they trend. They'll consolidate. You can see here how we consolidated here for 5, 6, 7 days, and we went up for 10, right? You could see that. If you go back and look, we consolidate more than we trend. And that's why this is normal. And I kept on saying this is bullish within the structure, within the bullish structure. Russell 2000, very, very bullish, back tested, held the upper end of the trend line of the horizontal support. This is very bullish. And again, I would not be shorting this. I would not be shorting the NQ. And I would really not be shorting the market until we get up to the upper end of that area of resistance of the 2778-ish in the ES. Okay. Next is going to be crude oil. Let me just get this out of the way. All right, great call in crude, guys. I know some of you have been long or short, in and out, as well as myself. I held the short all the way down to here, and that was pretty much it. Because once we get really extended and we go down hard and fast, crude oil is known to explode higher for a dead cat bounce, as well as gold is. But this did not happen, having some problems, having some issues. So we are at a first objective target of 64 in a 64 handle. Next area will be 63.38. And then I do believe that we can, based on our technical view, that we can get down from here, right? Get in this area somewhere. Now, if we lose this area, we're going to hit the 200-day moving average. That's going to be a no-brainer. But it's not as easy as it looks. And then we get all the way back up to 74, 75, and that would be the ideal shorting situation for all the way move all the way back lower into the 55, 56 handle. Okay, that's what I'm looking for. So we got the first corrective move lower. Then we'll get some sort of a catalyst to push this market back up to new all-time highs, which then we'll look to get long as well. Right, we're getting into oversold territory in MACD and RSI, so it's playing in the cards. We saw the producers still pretty much heavily short, so they see some more, they're a little bit more downside probing before we start to move higher. And then we should see what the numbers are today, on Tuesday with the API numbers, and of course the EIA inventory numbers on Wednesday. All right, that's going to be crude. Spiders, not a big move today, but yes, we gapped up. This is positive, very bullish. It has its own and one more left of its gap fill that needs to get filled. So we're looking at the 278.50 all the way up to the 280. All right, that's going to be the next area to get filled. Okay, GDX, again, guys, dead money here. I would not trade this until it breaks out or break down. And remember, a breakout or a breakdown usually will back test and make a higher low, if not fail all the way back down and reverse. So you got to be very, very careful. Even though we break out, you got to be very careful getting long here. You want to make sure we get the breakout, get the back test, look for that higher low or that lower high if you're looking to short it, and then see where we go from there. But GDX here, not telling us anything bullish, that's for sure. If anything, there's more bearishness in this pattern than anything. We did get a move lower in gold, so we're looking at a 1275, 1280 print to start the dollar cost average to trade all the way back down to the 1260, and then from there, once we start to move higher, you would leg into your last piece for your dollar cost average trade as you're moving higher, not moving lower, right? So that you'll go lower, you'll add here, you'll add here, you'll add here, and then your last piece, whether it be 3 or 4 times, will be always in your favor, moving that as it's now moving in your favor up to the upside. All right, but this does not look bullish at all. This is all bearish. Anywhere, every time it pops into the 1300, it's getting sold into. We could see it. So we're looking for one more flush, week longs out, and then we start looking for a dollar cost average trade. YM doing pretty good here. You got the 24,870 looking really good. The 200 period coming in at the 24,708. Again, these are your areas of resistance, and of course the big round lot number 25,000 here. All right, that's going to be the YM intraday. Next is going to be the ES intraday. We all know the 24.45 to the 55 will be an area of resistance. Once that gets taken out, we're looking for that other gap fill of the 27.78 area, way up above, which is not that far away, guys. A couple of days of positive trading, and then we really could get going. Okay. Next and last is going to be the NQ. Okay, really strong, and I really like this. And I know, believe me, I've gotten many emails, conversation pieces, speaking over the weekend, different managers. How is this market up, and why is this market up? Well, if you look at the template back in other market crashes, prior to the market crashes, they've done the same thing. It's unbelievable. I can't believe it. I can't believe it. Well, believe it, right? And again, guys, it's all about having no bias at all. Obviously, if you're long or short something, a stock or something, you're going to have a bias. I get it. And right now, but the structure, seasonality, where it puts us in for higher prices, and we're getting it right now. it could stop tomorrow and start to roll over. But in the meantime, let's continue to follow our patterns and look for higher prices, and that would give us a gift to short at higher prices. Have a great day, and we'll see you tomorrow. Traders, quick admin note at the end of the research video. For those of you who are interested in the private mentoring, again, as you know, we tailor it to you. Whenever you're done, whenever you feel like you've accomplished, you can cancel at any time. It is great. I go side by side, one-on-one with you. You can check that out on our website. You can send an email, support@tradingmarkettechnicals.com, as well as I did get some emails on our algorithm. You can run our algorithm. What you see here off our research videos is what you get, actually entries, okay, and exits on your computer. Okay, this is on your computer, no chat room, there's no mentoring room. You put it on your computer, you lease it. We're going to be running a huge special soon, so if you want to check it out, give us a call as well. Support@tradingmarkettechnicals.com. I did get some inquiries over the weekend. I am interested in it. I'd even let you test drive it. That's how unbelievable it is. So whenever you get a chance and you're interested and you have some time to sit in front of the computer and let it run, and then we can interact during the day as well.